Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock, with news there are emerging threats to junk bond yields. First, however, in the US, the non-farm payrolls report was better than for September, but markets were underwhelmed. 261,000 new jobs were added in October, less than the 313,000 expected. And their unemployment rate edged down to just 4.1%, in fact, a 17-year low. Wages are up 2.4%, but those gains are slowing. In fact, that was the slowest gain in more than 18 months. And Trump has confirmed that Jerome Powell will replace Janet Yellen at the end of her term at the US Fed. The US has levelled new duties on Canadian softwood lumber and is threatening Canadian milk imports. It's an $8 billion annual trade. Canada said it will take the US to the WTO over the matter. Both countries are also trying to renegotiate the NAFTA agreement. Orders for heavy-duty commercial trucks in North America soared in October, reaching the highest level in nearly 3 years. Trucking companies last month ordered 36,200 big rigs. That was up 60% from September and 160% from a year ago. That's when truck orders plummeted. North of the border, Canada produced a bumper jobs report and is seeing wages growing more positively, up 2.4% year on year. The combined impact, however, was to draw more people back into their labour force, and in fact their jobless rate rose marginally to 6.3%. In China, their financial system is getting significantly more vulnerable due to high leverage, according to the central bank governor. Risks are growing, he said, including some that are hidden, complex, sudden, contagious and hazardous. That's a good list. Even as he claimed the overall health of the financial system remains good. The government should also open up financial markets by relaxing capital controls and reducing restrictions on non-Chinese financial institutions that want to operate on the mainland, he said. And China has added more than $100 billion to the liquidity of its banking system in October. That's according to official data. That means it's now built up a liquidity support base of a massive $1 trillion. This is China's version of quantitative easing. And an interesting and potentially worrying situation is developing in Venezuela. They have signalled they need to restructure their $150 billion foreign debt. Investors until now had assumed they would keep making interest payments, partly because the country is being backed by Russia and China. But the US has them under embargo and the IMF is unhappy. So markets are now realising that a restructure is unlikely, especially as China and Russia move to reinforce their priority. Default is looming there. Junk bond yields are rising fast for the debt of other emerging countries, and that is threatening places like Turkey. The main investors will likely to be hurt are large hedge funds who drank the Kool-Aid. The losses there could be steep for them, and their pain could be felt in corporate junk bond credit markets, which have recently had a surprising rally. Something to watch closely. Certainly Graham Hart will be. In New York, the US Treasury 10-year yield ended last week lower at 2.33%. The price of crude oil is noticeably higher, up more than $1, and now just under $55.50 a barrel, while the Brent benchmark is just over $62. But the price of gold is down. It's down to $1,268 an ounce. The Kiwi dollar is little changed today. We are now at just under 69.1 US cents. On the cross rates, we're at 90.2 Aussie cents, and against the euro, 59.5 euro cents. That puts the TWI at 72.5. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.